Snipers here, back for another update. Let's take a look here at the S&P 500. Now, going back all the way to September 22nd towards October 10th, it did look like we had an ABC correction right down to this 50-day moving average. Do you guys see this white dotted line over here? This is the 50-day. We perfectly came down to it. This was your A, this was your B, and then your C wave. Then what we had on the 30-minute on Tuesday was a gap down, but then it ended up just being a gap and trap, and then we ended up rallying back above the 9-day moving average. However, taking a look at this on the daily time frame, we are seeing a little bit of rejection here on this 9-day moving average. So this could be a gap, another gap and trap, and then we come back down to revisit these lows at 65.53, which wouldn't really look bullish. It wouldn't look bullish at all if we ended up doing that. So what we would want to see here going forward in order to confirm more upside north of 6,700 is just simply for this 50-day moving average to hold here. Okay, especially on the weekly, 3-day as well. Okay, so if the 3-day, if we can get a 3-day candle close back above this 9-day at 66.86 and this 21-day at around the same level, then I think we have a good shot in making a new all-time high on the S&P 500. Okay, but so far we've seen the breakdown, but it's not a fully confirmed breakdown yet. Okay, there's been many times where the S&P has come down to the 50-day moving average, but has just reversed course. Like for example here, over here, right, over here, we even lost it here. Let's check here, right? So we've gone through many times in which we've done that and even had deviation below it. So that's why it's always important to stay patient and to stay calm and level-headed before making any rash decisions. I also wanted to point out that there's this thing what's called a corporate buyback blackout period, where corporations aren't allowed to trade their own stock. I believe it's at the beginning of Q4 in order to avoid market manipulation. Now that we're in the middle of October 15th, we're starting to see about 40% of corporations having that window reopen for them in which they can buy. By October 24th, mostly all corporations will be able to start trading their own stock and doing buybacks. So the reason I bring that up is during that buyback blackout period, you're going to see swings in both directions that'll fake out not only bulls, but it'll fake out bears really bad as well. So let's just wait and see how we react on the 24th, and especially going into the end of the month. So we'll see how it plays out. Still holding the 50-day moving average. All I would want to see here going forward is just simply a 3-day candle close back above the 9 and 21 day. And so far we have seen a rejection back down below it on the daily. So let's just see how it plays out. Russell 2000 is still at the highs. Did make an all-time high today, I believe, and yesterday. After Federal Reserve Jerome Powell had stated that quantitative tightening may be ending. Hope you guys enjoyed the video. Please like, share, subscribe, and comment. Peace out and take it easy. I'll see you guys in the next one.